Hello, traders. It is 8:10 a.m. Chicago time, 9:10 Eastern on Wednesday, the 2nd of October, 2019. Again, hopefully you hear me nice and clear this morning. This is episode number 1608. We're starting 10 minutes late. I've had some tech issues on my end, a router firmware update stopped midway and threw my connection for a loop. Still have some homework to do, so I'm going to keep this very brief. Still don't have my crude oil and Russell homework done or levels uploaded. For those of you who are convergent, you will see those cloud notes come up just a few minutes after we're done here. I want to remind everyone that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As you would well expect, the overall sentiment is risk off. Yesterday was an impulse day down, and for those of you who attended on Monday, we did talk about this, and I'm going to drop the link for Monday's Trader Bite in the chat here on YouTube. Those of you who are on Periscope, just ping me on Twitter and I'll send you the link. I think it's important to just listen to it again, not because I'm right or the indication I made was on point here, but it's because the context leading up to that conclusion may be worthwhile for many folks to listen to. Anyway, risk off today. The Euro stocks taking the biggest hits, down 70 points or 2% on the Euro stocks 50. The DAX is down almost 2%, 1.92, 235 points. The Nasdaq's off 52.5 points from settlement or 0.68%. The Dow's off 168 points. We're having our extension move now, continuation move. Crude oil looks unchanged. Very interesting that it is. Let me double check that. 53.65. Right. Well, crude oil is pretty much unchanged. And the leader here is gold. Gold running up $11.10. Let's move on to what's expected for today. You know, the overall theme of today's trading is going to be this slowdown manufacturing in the U.S. You may have heard or been here. The PMI number came in lowest since June 2009. Remember, June 2009 was the depth of the Great Recession, and it came in lower, and the market responded pretty aggressively to the fact that it did come in lower, and we dropped some 60 points, something like that, 50 something points in the ES top to bottom on the day session. So that's where we stand. There's a continuation of that in that the European indices are responding the same way Asian indices as well, and that's pretty much that. On the calendar, we don't have anything key today. We do have crude oil inventories. Fed's Harker speaking currently. Fed's Williams is due at 10:50, and then balance of trade out of Australia at 9:30 p.m. Let's take a quick look. I'm not going to do very much of a review. Yesterday, given the stance that the market was at, remember I told you earlier this week. In fact, let me start with that. Here's what I covered on Monday. And I brought in this caption, which isn't exactly right, 2927. I brought in this caption to say, hey, one-time framing up on the weekly ended last week. The market is setting up for, this is a bear flag down. The market's setting up for rotation down, and the target is what? Right here, 29.27. Why? Because that's the MC point of control of the last balance zone, and we are right here, right now. We're in fact trading 29.20, 29.27 acted as resistance on the pullback about an hour ago. And we are here trading this high volume node on the MC from August. And that was the expectation. I said over the next week, the next weekdays, as you see there in the caption from Monday's video. Again, I'm not posting this to say, look at me, I'm right, because I've been around long enough to know that it's random when things happen, really, but the nature of the market is somewhat predictable. I do encourage you to go back and listen at least to the segment with this chart, with the composite chart, to understand how powerful context reading is and how important reading the auction is and how important it is to understand volume profiling, even though you may be triggering off of fibs or moving averages or whatever. Understanding the auction is quite important. Here's what we had yesterday. Yesterday we're pushing up against that 91.75 area. And I'd said that there's quite a bit up here that we're likely to tangle with, and the expectation was for the market to push down into the prior point of control and the MC point of control and bounce back up and push towards 29.96, 29.95, 96, which of course it did immediately on the open, and then it just sold off on the ISM. There's no way for me to be able to predict that the ISM is going to be that far off. I just don't have the connections to be able to do that, unlike other people like that congressman or whatever who got arrested for insider trading yesterday. But um, here it is. It rolls over, and we have an impulsive day. We pushed right through the entire balance zone in this area and through the gap zone. So there's the microcomposite in red just bleeding all over the screen, and we could not take out and hold above that 29.9175, which I've been talking about for some time now. That area, as long as it does not hold, it is likely to get tangled up in the middle here, and which is around 29.80. 81, and if not, then it's likely to rotate down. And given the way the week finished last week, we're likely to rotate 29, 27, 26.75, really. But that's how things are shaping up. Now, we have a continuation move. We put in a low at 29.1675, and what we have to do is start looking at the prior MC, the prior microcomposite on the ES. So let's pull that up. This is the chart that I showed you on Monday, my composite chart. Now what we have to do is pull up the next. So we moved from one balance zone to the next. Here's the upper balance zone, right? We've got the all-time high balance zone over here. We broke down, we bounced down here, then we bounced, so we moved from here to here. And we're moving back. Now we're moving back into this balance zone. So it's really key to understand what areas are important down in here. And one of those is this 29.16 area that is the low of the overnight session. That's the first low volume node. The key low volume node really is a little farther down at 28.95. And today I'm expecting the market to get tangled right in here at this composite area. And so that's what I'm looking at for today. With an impulse, with a move like this, as I've talked about many times, with a move like this, we expect a little bounce back on the close, and then we expect a continuation or a balanced day, a rest day the following day, and I expect that day to be today. Now, the overnight session, let me pull that chart up. Sorry, it's somehow I close it every time once I get done with it. The overnight session, steady going until the Europeans open. The Europeans opened right here on this bar, and the Europeans came in and feverishly sold off. And what we have is an overnight profile. It has two distributions. It's got pretty good volume. We're below mid, below VWAP. The point of control is near the low, and we have a weak low. This is a weak low down here. My expectation is it's likely to consolidate here on the open and expose lower prices. And so that's what I'm looking for from the overnight session. The overnight inventory is about 50%. Actually, it's balanced. It's 50% above long. The inventory is 50% long and 50% short, pretty much. Although there's more volume on the short side, and then that's in price. And in delta, the overnight inventory is short. Here's what a CT bookmap looks like for the order flow. Look at that thing. The pretty steady until let me turn down the news feed. There's a lot coming through right now. Pretty steady sideways, and then the Europe comes in and they just plow right through. We have a nice little collision here. We want to track this area at 29.30 for the session. Where the collision happened. We had a nice little reversal and pullback to the collision zone as expected and look for the continuation. Of course, I was asleep during this time. And then we moved into the next collision zone down at 29.17, and that's the low of the day before we bounce back up. Liquidity is looking pretty, the order flow is looking pretty orderly this morning. Let's zoom out and see if there are other big areas. The next big area is down 29.1150. 29.15, 11.15, 29.09, all starting at the same time. So this is cause for suspicion right here with those orders being put in all at the same time and not transitioning from somewhere else. It tells me, yeah, okay, there's liquidity here, but be careful. This may be a spoof. 29.1150, 29.09, 29.06. Those areas don't seem like they are very strong areas in terms of what I'm expecting to hold until 2900. Let's take a look at what we're expecting for today. I just recognized an issue with the Cloud Notes server. I'll fix it in a second. These levels are actually not correct. Let me just upload my levels again. 1 second, please. Server's not operating properly. Yeah, lots of tech issues today, unfortunately. Really puts a cramp on what I'm doing. So here we go. Those of you who have CT Bookmap with Cloud Notes, your Cloud Notes should update in the next 5 minutes. So those the gap zone and all that should disappear here in a moment. Those of you using the Futures Trader 71 master levels, those should update in the next 5 minutes or so. Here's what we're looking at for today in terms of a plan. Unfortunately, these levels didn't update properly, but they will here in a second. Here's what I'm looking at for today. Again, we are in this big composite back here. It's a lot of information. I can't pull it in right now, but overall, I'm expecting an open auction. Oops. The main idea following an impulse day on a gap down is an open auction. There's a higher probability of a drive in terms of an open test drive or an open drive when we have a gap down like this. But in general, given the conditions set up by the overnight session, I'm looking for an open auction that attempts to be responsive, but I'm looking for the overnight low to be taken out, and I'm looking for it to try to push lower into 29.08, 09, and then to consolidate and likely to start moving back up. We may end up with a gap, but overall, I'm expecting this to be somewhat of a rest day. We'll see if the market is really able to um, absorb the ISM information and discount it like it's discounted all other items. I mean, the ISM is a pretty important factor right now, given that manufacturing slowed down globally and has been slow for the last 2 years or so, and now the U.S. has been kind of holding up, propping up the economy, the global economy, and now ISM manufacturing coming down in the U.S. may lead others to want to just step aside given the uncertainty. The secondary scenario is an open test down, impulse up, drive up into 29.12, 29.15, I mean, sorry, 29, 30, and then back into 37 for a push into the point of control. I expect it to get tangled here before it rests. Again, that would be also a natural way to continue an impulse day. On the tertiary, the third scenario is an open test up, unable, impulse down as more sellers step in, consolidate at the overnight low, continue the push down and start moving towards 2,900 here. And it may actually shift all the way through into 28.92, 94, that low volume node before we see a bounce. I'll leave you with that. There are only about 3.5 minutes left to the open. Until the open. Try not to, if you did well yesterday, try not to be a breakout trader again. I would suggest again, wait for the market to set up for the first 10, 15 minutes and then move on from there. If you did well yesterday, or even if you missed it, try not to be so aggressive today. Volatility is expected to continue into today, but don't throw away your risk plan. Don't throw away your risk plan just because you didn't participate yesterday or because you think you have house money. It's never house money because the price we pay to learn to trade is very high, and all you have is a debit in your account. And if you made money yesterday, you just basically paid back some of that debit. It is not house money. It's not gambling money. Okay. Good luck today, and I'll catch you tomorrow. And sorry about the delay and the technical issues. Should be behind me here in a minute. Take care.